Hi, my name is Alex Carlucci with Gustan Associates. I'm going to talk to you about cash out refinancing. Highly recommend if you find yourself a little buried with debt and you're overextended and you think you're going to be late on your mortgage payment or not be able to make some credit card payments. I highly recommend you utilize the cash out refinance using the equity in your home to pay off the debt. If it's just minor debt, then I wouldn't do it because you want to pay that debt off. But if you see yourself overwhelmed with debt that there's no way that you're going to be making minimum payments for the next 5-10 years, do the cash out refinance. So this is how your two main options are. It's conventional and FHA. So conventional will let you go up to 80% loan to value. So let's say you owe 100 and the house is worth 200. You can take 80% of that 200, which would be 160. So you could borrow roughly 55,000, and then the other 5 would go towards closing cost and escrows. So you get $55,000, and you take it and you pay off $55,000 with the credit cards, car payments, or whatever that. And that increase in $60,000 alone is only going to be about $200 or $300, like $300. So if your monthly debt that we're getting rid of that paying off $55,000 is more than $300, then you're winning. But I wouldn't do it if it was just $350 because you're financing over 30 years. So let's say you're spending $1,000 on all that debt for $55,000. Wipe that $1,000 payment out, increase your payment by $300. You're net saving like $700 a month, and that $700 a month can go a long way. I would recommend you pay down your mortgage with that. There's no private mortgage insurance for the conventional cash out refinance. So that's the conventional. FHA will let you go up to 85% cash out, which gets you a little bit more. So if you really need that extra 5%, but you really want to go conventional, then you're gonna have to go FHA. Now the downside to FHA is that even if you go to 80% loan to value, you're gonna have PMI. FHA loans always require PMI, and that PMI is, no one likes paying PMI. So they go up to 85%. Same rules. Go to, pay off all your credit cards and include it in there, but they go up to 85%, and it comes with PMI. So those are the two main ones. Now, if your credit's really bad and you're starting to fall apart, we have a non-QM loan you can go to cash out. And different ones, if it's primary residence, probably go up to 80, 85. If you have better credit score, maybe even higher than that. So that one is going to be a higher interest rate. You might be at 7, 8, 9%. But what you're going to do is you're going to reduce all your problems. Your credit score is going to go way up because let's say you're a 550 and your only option is a non-QM refinance. And because you're overwhelmed with debt, you refinance and pay off all that debt, your score now might shoot up to 620, 650, you never know. And in that case, you have to wait 6 months and you can refinance out of that into a conventional or FHA at a lower rate. So if it's just a temporary band-aid, it'll fix you for a short period of time. And the reason you might have to go non-QM is because you had a bankruptcy within 2 years or 3 years, foreclosures, or you got maybe 1 mortgage late or 2 mortgage lates in the last 12. Well, FHA conventional won't touch that. These non-QMs will. So if that's an emergency situation, you go the non-QM route, knowing that you're going to get out of that loan. Now, these are all primary residents. So if you want to do investment properties, cash out is 70% for conventional, and FHA doesn't have investment properties, so there's no investment cash out. And the non-QM will cap you at 70% too. But the problem with the non-QM, if you do 70% cash out, is that you're going to, you might go to 75 on the cash out non-QM. The problem with the non-QM on investment properties is that they're going to give you a prepayment penalty of 2 points. So if your loan's $200,000 and you want to refinance it out of it in less than 2 years, they're going to charge you 2 points of the loan. That'd be $4,000. So it's a 2-year, 2-point prepayment penalty that you're stuck in for the investment property. So that higher rate will follow you for at least 2 years. Then you can refinance into a conventional loan after 2 years without the prepay, and hopefully your credit score is good enough to get yourself a conventional refinance. And that is how the refinance cash out works, and I highly recommend you do it if you're going to save yourself $500, $600 a month in monthly obligations by paying off the debt. Cash out refinances are real popular right now, and I definitely recommend them if it's going to help you use your home for this purpose for sure. Thank you very much, and if you like this video, please like it and share it. And if you got any questions, leave them below. We'll get back to you. Thank you.